Alright, good evening everyone. This is DayTraderRockStar here for Wednesday, June 4th. I haven't done a watch list in a while because I've been just working around the clock on a lot of website stuff. So definitely come by DayTraderRadio.com. Check out the new features and stuff that's happening. Full house everyday trading from live on the radio from 8:30 to about 4 o'clock each day, 8:30 to 4 o'clock. So definitely come on by DayTradingRadio.com. Let's get to the watch list. Normally I go over a bunch of stocks here, but I really want to concentrate on this move that the S&P is going to be making soon. It's very important to watch the overall markets instead of sometimes finding specific stocks. You get a pretty good idea. If the market's going to pull back and you're looking to go long, you might as well just pull back on some of your trades and let the market lay out here. I go over this every day in my radio show that each day there's always a new trade out there. You don't have to force yourself to trade. It's very important to develop that discipline and the patience in trading, to let the trade come to you. So when things are not looking that good, maybe you shouldn't be jumping in there and trying to force a trade. This is only going to save you money in the long run. So just a little tip from the DayTraderRockStar here. So let's take a look here at this rising wedge pattern. Of course, you heard me talking about this rising wedge pattern as it was forming, and we're looking for a breakdown of it. Perfect breakdown of it right there. And we had a nice spike down, and we had a reaction rally back up to the 200-period moving average, 200-day moving average, actually right there. And look at that, how perfectly that hit that. And then we failed that rebound, which is always called a reaction rally or a counter trend rally. It's usually a bull market, fast little move up, and then a failure. So this is a perfect textbook chart, perfect textbook breakdown, perfect textbook counter trend rally, reaction off the 200-day moving average here, and everything just looking, just working out very well here. So I wonder why this is not coming up here. Let me just double check something here. Clean that. Anyway, so what we're going to deal with here is now where we headed. Now, I've always maintained that we had a pretty decent gap down here at 1385, 1390 area. I mean 1285, 1290. But you know what? I've been feeling stronger about the market these days. I feel like it's kicking and screaming and trying to stay up here. So if we just go through some pattern recognition work here, and we actually look at measured moves, and measured moves actually, as a definition of measured move, is actually each pattern that develops, and people trade off of patterns. You have all kinds of patterns. You got the head and shoulders patterns, the inverted head and shoulders. You have bull flags, bear flags. You have wedges. You have pennants, and we're dealing with a wedge right here. So a measured move to pretty much calculate how a pennant, where the projected move of a pennant would be, is you take the width of the pennant. Now I'm going to give it the benefit of the doubt. I'm not going to go all the way back down here because we had a really extreme sell-off in March, and you know what? I'm just going to give it the benefit of the doubt. I'm going to say, all right, the width is here, right around this, because we have two defined moves of the trend here. This is the second part of the trend line where it touches, and that's where I usually do my measured move. I don't usually go right back to the beginning, the first time it touches the trend line, which we have it defined, because that's not always defined properly. So I go to the second area where it defines the trend line, and once you have the second spot on the trend line, you have a trend line. It's basically how that works. You need 2 points to make a line, and once you have those 2 points, you can follow that line up there. So once you had these 2 points here, this area here in March and this area here, if you drove that, pretend there was nothing past us and drew that trend line right up there, you'll notice that the stocks come up and hit it perfectly, pull back, come back up, hit it perfectly, pull back. These patterns work, so get to know them. So your projection move here, or measured move, you would take, I usually take the second area where we form that trend line. You take the distance. I'm taking it from the left-hand corner to the right-hand corner here, and I'm just going to bring it over to the point of breakdown of the chart pattern, and I'll measure that out right there. And that's pretty much giving us an area about 1348. We'll call it 1350. 1350. So 1348, pretty close to 1350. 1350 sounds like a pretty decent number to me. I don't know about you. It sounds like a good number. Just to have a number like 1350, it just sounds strong, So I'll be watching 1350 for the first area. Maybe That's where I'm thinking we could get down here. And now again, I always also say that patterns are meant to work out, and sometimes patterns are meant to fail. Not what works this year doesn't always work next year, and what worked last year doesn't always work this year. Did I just say that twice? It must be the margaritas tonight. Anyway, just remember now, if you get rid of this trend line here, we're actually working with something else now. So I would just now let's concentrate. Now that we know we're in a pattern downtrend here, what we want to really watch is the downtrend line. Again, we have 2 points now, the high here in May, and we have the high here a couple days ago at the end of May. So we're going to follow this trend line. Going to look for first signs of strength above 1410. If we get above 1410, I would be bullish in this market. If we don't get above 1410, I would continue to be hesitant. I wouldn't be jumping in too aggressively in this market, because there's always 2 points here. We have that 1350 of a measured move of a horizon wedge. We also have a gap down here that we have a potential to fill in. So even though these are not guaranteed moves, 1350 seems more realistic right now. And that still is a ways away. So considering today's close, where we did close 1380-ish, it's another 30 points down in the S&P. That could happen in a day or two. We'll see. All right, so that's about it on the S&P chart. I just want to go over that with you. I hope you guys could see that clearly and what I was looking at. If you have any questions, you can email me at ironaction@yahoo.com. There's some stocks that I'm liking here, so we'll go over those fast as I have a few more minutes left. NVIDIA, NVDA. Like the NVIDIA here. I noticed when I actually, I think I put this one on my 10 for 1,000 watch list. And we're pushing right up against the 200-day moving average here. We pulled back off of it. It shows you how important that 200-day moving average is. And we pulled back off. It's an inverted head and shoulders. So I'd watch this trend line right here and just look for some strength after this nice down day, nice distribution day. I would watch for a day of strength and consider scaling in on this one. This one is, don't jump in, don't jump the gun. First scale in. You want to make sure this 20-day moving average actually holds here. So you want to watch the 20 and the 50-day moving average. As long as we trade above those, I would consider this stock a very bullish stock and ready to continue higher. So that pretty much means you have a pullback, potential pullback to $22, and I would still consider this a buy. So just take that in consideration when you try to find an entry on this one. Scale in. Cisco actually looks very interesting. Nothing really written up on this, but you can see just really fighting this $27 level. I think we're going to see higher numbers in Cisco, so I'm starting to add that one to my watch list. Now let's take a look at Motorola here. Motorola making a double bottom around $9. If this one actually starts heading up, expect this one to hold this double bottom. So we have a little 3-day downtrend here. Once we break this 3-day pullback, if we do break it and start heading up, and the first sign that would be very aggressive on Motorola is a breakthrough this 20-day moving average. This 20-day moving average, if we started trading up above that, I'd be very aggressive getting into Motorola. I think Motorola probably has a nice run into it too. It doesn't move that far. It's pretty much a turtle, but we definitely might get a move up to $11 once we get above that 20-day moving average. So Motorola, always one to give a good eye on. Traded successfully. We saw some good moves in the Option Express today. DUG. I sold my Tessero, but I still like the Valero. A lot of things that are still looking interesting. The XIDE, sold that one today for a nice profit. DAR, one of my favorites, past favorites, Darling. That's actually approaching the highs of the 52-week highs here too, and breaking out today too. A lot of the stocks I'll talk to most of them about tomorrow. I'm actually going to focus on another video on the Home Depot trade that I have coming up for a 3-point trade coming up at Home Depot. So hopefully check out the website, www.daytradingradio.com. Come by, listen, it's all free. And I hope to see you in the markets. All right. This is Day Trader Rockstar, and I am signing out.